I don't know, is Tshepo or Mpho? I think Tshepo and Mpho will join us as time goes on. Before I can start, can I get a confirmation from you guys? If is everything, can you hear me? And things like that. Can you put on the chart? Because it will take me time to open up the thing. If is everything in order? Okay, let's start then. Because Mpho is not here. Massive then. Okay. So it means I'll keep on monitoring the charts so that, yeah. Last time we ended up with the journals. So maybe if you are not part of the lecture previously, you'll go and catch up, because I don't want to waste time in catching up as to what we did, what was required. But the required was that we prepare the cash receipts journal, cash payment journal, sales journal, purchases journal, and general journals. That's what we were meant to do last time. Then from that, the next step is to prepare the ledger accounts. So I've dealt with the accounting equation a lot of time. I've dealt with the accounting equation to explain to you what are the debits and what are the credits. So just to remind you once again, how do we decide whether do we credit or whether do we debit? So normally the accounting equation, just to so that it coincides with debits and credits, it's assets is equal to owner's equity plus liability. So this means assets, just to remind us, we'll keep on, assets are on the debit side. So you can write this if you want to decide whether you want to credit or you want to debit. And owner's equity is on the credit side. And the logic for the owner's equity and liabilities to be on the credit side is that they are more of the same. This is what the business owes. It owes the owner and it owes the third parties, liabilities, third parties. So that's why these are on the credit side. And owner's equity is made out of capital and income, less expenses. So I'm sort of just reminding you here. And owner's equity is the owner's wealth. That's to sort of remind you. So when we debit and when we credit, why do we debit, where do we get that from? Yeah, so it's capital, it's the owner's wealth. Yeah, so this is the accounting equation, but so that you can see properly, let me remove this. Let me do like this. So that we still have Yeah, it's owner's equity plus liabilities, which is capital minus expenses. Now, how do we then decide? So if, like now, so now remember the cash receipts journal and the journals, we were summarizing information now, batching it. Now we've got the totals. Then now the required was that we needed to post into the ledger. So in case maybe you, this is exercise, I just want to check it for you. What exercise is this? It's 5 point. So that's on your side. If maybe you are not part of that lecture, but you can still follow from this. Just want to check for you, but I think it's 5.11 or something. Just that for me, open, it might disrupt me. Just want to see if I can check for you. Yeah, I think it's 5.11 or something like that. So before I start debiting and credit, because I don't think I've got for today, I just have to keep checking. I'll keep on checking. I'll be keeping on checking the chart. Okay. Then so now this means then that you have to then debit if you have to debit and credit if you have to credit. Yeah. So now you can use whatever logic you can use to complete the ledger accounts. Sometimes you can start with the opening balances, or you can start, because there is a pattern though that you must follow, or you can follow the pattern of the cash receipts journal. So let's follow the pattern of the cash receipts journal, because if I start with the list of balances, it sort of gives away as to whether is this a debit or not. Sometimes you might not be having list of balances to decide. So I want you to decide with the, because you can be given the cash receipts, the journals, like cash receipts, cash payment journal, and the totals. And then maybe we have to figure out whether was this a debit or whatever it was. So let's start with the journal. So we start with the first account, bank. So if bank has been received, it means it's an asset to an entity. So, but first, before, but every accounting starts with the opening part. So let's see what was the bank account. So the account we start with will be bank. So I'm coloring black, white. So we start with the balance. So the balance of bank is a debit side because it's an asset, which is on the debit side. So how much was this opening balance? So the opening balance, I've just highlighted it for you. It was 2,554. Opening balance. So we take it as it is. Then let me highlight it so that you can clearly see what we've done, so that you see. I'll highlight it in yellow as well. So we have an opening balance of bank. So it's on the debit side because bank is an asset, it's on the debit side. Here we have cash receipts journal. Where do we have cash receipts journal? Cash receipts journal, it's an asset. It's money coming in. As I was showing that you debit asset. So cash receipts journal, you're gonna debit it as an asset. So that's gonna be total receipts. This should have been. So the amount is here. And so this is the balance. This was the balance. Then from there, yeah, then we have, what do we have from the cash receipts journal? So from the cash receipts journal, we have total receipts. It's at the end of the month now. We are posting, which is how much? Which is this 3936990, which is 36990. 36. We are debiting it because it's an asset. Then now, so that we finish with this account, let's go to the cash payments journal. So in the cash payment journal, there is a money that came out. So if it's cash payment, so it means it reduces assets. Assets, because they are on the debit side, it means they'll reduce on the credit side. So you're gonna have total payments. There should be an S there, but yeah, just don't want to mess up that whole thing. So total payments, here it is. I total these amounts afterwards, after we finished. If you've got a question, then you must ask, because this is the first ledger, and then we will then continue from there. So 31089. So these are total payments. Then you have to balance now. Which one is a bigger side? So if you add 2554, if you add 2554, 23699, then you're gonna get 39544. And then this is the balancing figure now, 39544. So now we need to end up deciding which amount do we carry. So then there should be a balancing figure here. So a balancing figure, we're gonna say 39544. Sometimes 544. Sometimes you see, I can call an amount, but write a slightly different amount, because you see, I'm talking while I'm writing, but the correct amount or correct whatever, it's in your study material. So it's 39544 minus 31089. Then from there, you're gonna get 8455, which is the balancing figure. So this is this when we were calculating the balancing figure. So this means the balancing figure, it's 8455. Because we try to find which amount can we end up balancing this account. 8455. Then it's a carry down, and then we bring it down here. 8455. Then I'll check on the chats, because I don't have Lecho as to. I'll check on the chats as to whether is there anyone maybe who has a question, because I don't want to get too far. Like you say, while we are starting, maybe we might have questions. Don't want to get too far while you have questions. So if you've got questions, you can drop those questions. Let's see if there are questions. Hi, could someone share this? Oh, okay, that's something else. You want recordings? But we didn't have Saturday's recordings. Recordings are on the. Is Taco here? Why is Taco not talking? I don't think Taco's here. He would have confirmed if he is here. He is here. Okay, then let's continue then. So now, what do in fact, I wanted to go to the cash payment and cash cash receipts so that we finalize this account. So you can follow whatever pattern that you can follow whatever pattern that you can follow, but as long as it's a pattern. So like from this account, there is no specific pattern you can follow. From this account, I'll then have to post sales. I would like to post sales. Sales, so let's deal with sales now. And now, but before I post sales, I want you to see something. I'm not going to add. You can add. You've got this exercise in your. You've got this exercise in your study material. If you add all this, it's gonna. If you add all this that I've just highlighted, because I'm trying to make you see how can you quickly. If you add 10,900, 911, 0, 5, less 500, less 75 plus 1775 plus 15,800, you're gonna get to this amount here. This I'm just highlighting now. 36,990, which we debited here. See now, I'm on the other slide, on the other screen now. We debited this amount here. Debited this amount here. Now, what does this tells us? This if we've debited this amount here, it means, because you might struggle to decide sometimes. It means if this was a debit, because I'm trying to show you different ways of knowing how to know whether it's a debit or a credit. If this is a debit, fine. If this is a debit, just once, yeah, this amount. If this 36990 is a debit, then this is a credit then. See. These credits I'll write on top so that it doesn't. So this is a credit then. This 10990 because of double entry. You see, so it means then that this is a credit. It means then this is a credit. It means then this is a credit because you've debited. Oh, this is a debit because it's the opposite. This is a debit because it's the opposite. This is a credit. So these are other ways that you can master this thing. If maybe the question it's coming and it's asking whether is this output VAT a debit or credit, maybe you want to decide quickly. You just look at the bank account. This was bank received. It was a debit. Then you go quickly to say, oh no, it means then all these were a credit. So this is one of the ways I'm trying to. But you can, in fact, you find your own way of reasoning these things. But I'm just giving another way of reasoning these things. See. So now automatically, then having said that this is a credit, then it means let me start just because in fact the balance give it away. So it means let's credit it then the sales account because we've already decided it's a credit. In any case, income from sales it's a credit. So we're gonna have sales, cash sales. So the control account is bank. Because cash receipts and cash payment, it's bank. It's gonna be 10,999, 10,900. Then just as I don't want to, in fact, to start with the opening balance, I didn't want to start with the opening balance because it was going to give it away as to whether is this a credit or a debit. I wanted you to reason in another way. In any case, the opening account, it sales, it's 13569. So sales, I've just highlighted it there. The balance is on the credit side anyway, 13569. Then now, the sales account is made of the opening balance, cash sales, and there's normally credit sales. If you've got a question, that's if you've got a question, you can be posting it. So sales, it becomes sales after, so here is the sales journal, which is a sales spreadsheet, which was putting together all sales. So we will, it's good to also highlight once you've dealt with something, because in accounting it's clumsy. You won't know what you've dealt with. So we've dealt with sales 16,000. And then we add. So we're gonna get 40,469. You see. Then now, in fact, we are following the pattern of the cash receipt journal. So I'm gonna unhighlight everything here so that we'll only highlight what we've dealt with. I was just showing you as to what is a debit, what is a credit. So we've dealt with this. That's it. So you follow whichever pattern you feel it's easy for you to follow. Then now we follow the next account here that you post. It's trade receivables. Trade receivables. Starting, they start with the opening balance. Trade receivables. I hope starting with the opening balance is what will make it make you understand easy. Starting with the opening balance. So the opening balance is 2431. It's on the debit side. Trade receivables is because it's an asset. Balance. Go down, which is 2431. 2431. Then now, so we go to the journals. Trade receivable. How much was our trade receivables? It was 9,110. No, this is trade. Trade. This is. Let's have to quickly text. So our trade receivables, it's 9,110. So now, that's why I said, because it then confuses you. What is this trade receivables? That's why I already said to you is that already another way of reasoning this thing is that this is already a credit. But in fact, why are we crediting this? It's because it's cash receipt for trade receivables. So when money is received for cash receivables, is people who are paying us, paying the business. But in any case, you look at the cash receipt, it's already a debit. So it means these trade receivables, it's a credit. So that's why it gets a little bit confusing. If you can master the bank account that is a debit or it's a credit, then you will know that the rest are, if the bank is a debit, you know that the rest are credit. Because sometimes it takes time for you to master whether is this a credit or is this a debit, you see. So that's why then you have to do it like that, which is 9,110. 9,110. So it's gonna be bank. Yeah, it's a bit cumbersome, but yeah, that's how maybe I can try to explain it. It also works with getting used to this thing as well. Then now the trade receivables were reduced with 9,000. The trade receivables were reduced with 9,111. So we granted a settlement discount while we are still on that. Let's have to see. Just want to see if is this the correct exercise that I'm working from. So we granted a settlement discount, but before we deal with the settlement discount, because I have to first verify, so let's then from trade receivables, then we will then have to add now the trade receivables from the sales. Trade receivables from the sales channel. You see, we've got it here. Trade receivables from the sales channel. So now that's why we have to know whether is it an asset or a liability. So trade receivables are an asset. So because these were credit sales. So then we're gonna have it as sales channel. Which is how much? 18,400. So what we've dealt with, we highlight so that we not we can see as to, so that we can be able to see as to so that you can be able to see what you've already dealt with. What else now? It's outstanding that you have to deal with, that has to deal with trade receivables. That's one now. Here it is. On the sales return channel, you see, we've got sales returns. This is sales returns channel. Then, because like when you are returning an item to a retail store, then that reduces your debt. So the data is reduced with the sales return. So how much is our sales return? So our sales return is gonna be 345. Then from there, we then total everything. So if we total this side, I'm not gonna do the balance breakdowns now because I've done it before. It's gonna be 20,831. And the balance, so so this here is going to be 2831 as well. And then the balancing figure, when you say 2831 minus these two figures, then our balancing figure is going to be our balancing figure is going to be 11,376. That amount so 11,376. So this amount so this is the balance carried down. So this is the amount that you're gonna take to your trial balance. So here it is. So once you have it as a debit, as a carried down, then you bring it as a brought down. Which is gonna give us 11,376. And the other thing, sometimes you might not see with this transaction, but these transactions are repetitive. Maybe you'll see with the third one or the fourth one when we do the fourth one. So this way, trade receivables control. So we are following the pattern now. So this way, trade receivable. So we've dealt with trade receivable. So we are dealing with these things one by one. Then now, what is next is the settlement discount granted. So what is the settlement discount granted? It's more like an expense. Settlement discount granted. So then let's open. It's already opened. It's ledger then. So with the settlement discount granted, you're gonna start with an opening balance. It gives it away. What is the settlement discount granted? Here it is, 170. After dealing with VAT, I will open for questions if there is anyone who has a question. So the balance brought down 170. I've just highlighted it for you. Then we come here on the, and also, yeah, these are repetitive. Maybe if you don't see with the first transaction, then you'll see with the next transaction because we keep on repeating. Remember, I mean, because sometimes you can get confused because it's almost settlement discount here and there and everywhere. That's why I said, if you master it, to say, if you've decided that this is a debit, then it means everything is a credit, but these that are positive are gonna be debit there, and an opposite sign are gonna be debit then. But also, what is the reason for a settlement discount being debit? It's an expense of just, as I was saying, to say that owner's equity is capital and income less expenses. So income is a credit, expenses are a debit because they are a reduction in the owner's equity. So that's why we have the settlement discount being a debit. So let's deal with the settlement discount then being a debit. Settlement discount granted. So there's a difference between a settlement discount granted. The settlement discount granted is what the business would have given it to its clients. Then I'll explain a settlement discount received. It's a discount that a business obtains when it settles. Just that as people who are buying from retail shop, we don't normally get settlement discounts. I think so. But businesses, there, settlement discount is settling an account earlier. So let's deal with the settlement discount granted. So this is gonna be bank for the settlement discount granted. Gonna be trade receivables control. Because it affected the contra account, it affected the debtors. Which is how much? 500. And then that's 670. So let's close it anyway. And we move on. We move on. So I don't want to deal with VAT now because it involves a lot of things. Let's deal with VAT. Let's leave it till towards the end. Once you've just gotten maybe accustomed to these transactions, then now you see we are finished with those that are on top. Then let's deal with the sundry accounts now. What was on the sundry? On the sundry was a capital of 15,000. Let's open a ledger account for capital. Once I've done with the cash payment journal before moving to the cash receipts journal, then I will open for question, and that's if somebody has a question. Let's look at the opening balance. Let's see. What was the opening balance for capital? The capital, the opening balance was 75,000. It's already on a debit side, so it gives it away as to whether are we debiting or crediting. So that's one of the ways of seeing whether are you debiting or credit if there is an opening balance. So balance, opening balance, brought down it's 75,000. Then now let's then go to the cash receipts journal. You've already decided that this is going to be a credit because you've debited bank, because these things have to balance each other out. Then now, but in any case, another reasoning for it, it's because it's owner's equity, which is a credit. Capital is a credit, so it increases on the credit side. So 15,000. Then I think we are done. Then we total this. Then we move on now on another transaction. There is only Sunrise now. Sunrise is just non-routine transaction. So we have a rental income. We have a rental income. Let's see which starts with the opening balance. So these are monthly postings. So in case you are wondering, when do we do this posting? These postings are done monthly. So we batch everything during the month, individual transactions, and then at the end of the month, we then post to the balance until I think because there are 12 months in a year, then until we reach the 12th month, which would be the financial year end. That's when we prepare the financial statements. So the balance for rental income is going to be, so at the end of every month, somebody posts, but now it happens automatically. This and rental income is a credit because it's income. It's income. Income is on the credit side. It's owner's equity. It is owner's wealth. Then you go to the journals. How much rent for this month? This month was, so we add again. How much are we gonna add for the rental income? We're gonna have as bank another 800, which then makes us 1,006. Now I will go to the charts if there is somebody who has a question before I move over to the cash payment journal. Okay, yeah, that's good. Somebody, I start with the last question. It's Troy Mohammed. I think tomorrow I will have so if you can give me a response, maybe whoever it is, if maybe will this help you? If somebody is waiting in the lobby, put them in. I don't know why is it still doing the lobby thing, because I made everybody to join to join automatically. So please put the people who are on the lobby in. So somebody said, will it be possible to get? I'll check the. Yes, I'll check the total, but the correct total is the one that you have anyway. So I've spoken to my colleagues regarding, because somebody was saying that you wanted old papers, question papers to revise with. So my colleagues told me that they will upload for you. Call this. They will upload for you. I think a self-assessment question, a self-assessment exam, where you will test yourself first and see how well you did, so that maybe you'll see whether you still to do quite a lot of work, because in any case, the other thing with this assessment, there's only one opportunity, you see. So that is that. So if you've got maybe follow up, then you'll post that. Then, yeah, that was for that. Let me see if this is for more. I think that covers the mock. Is if settlement discounts are negative, then are debited. Does that? I know you are confusing it. Yeah, settlement discount. Because settlement discount, you see, there's a settlement discount granted and settlement discount received. If you are talking like there, we're talking about settlement discount granted. So it's a debit, so it means it's an expense. So now I was answering the question from Spiwe, Maling, Troy. Will there be lecture on how to do adjustments? Yes, Troy, there is a lecture to do adjustments. I think that it's tomorrow's lecture to do adjustments now. Now, once we have a trial balance, then next thing we do adjustments and then we do financial statements. So let's take you through the whole process till the end, financial statements. I think the last lecture we will have, what to call this? We will do the cash, the bank reconciliation and all those type of thing. Do we have a memo in a PDF unit? Where are links for these scroll classes? It's down here. Okay. A memo, you've got it. I think it's 5 point. Other colleagues, other students who knows where is this question, can they type here? Because yeah, it's not written as to where is the question. Then now let's continue then after I've addressed some of the questions. Then if you've got questions that maybe I haven't addressed, I could have addressed, then you'll then pop those questions in. Let's then look at the cash. This is what the cash receipts journal, because we are following the logic of cash receipts journal. We've already dealt with bank. We've already said in the cash payments journal. We already said in the cash payments journal. In the cash payments journal, this 31089. Let me color it maybe somewhat different so that you can see. 31089. And also, please send me an email, even though send me an email so that I can remind my colleagues, because in fact, they were supposed to, I think, because I was checking it today, I couldn't see it, the self-assessment, so that I can source it during the day tomorrow. So yeah, the bank and the cash receipt journal, we decided that it's going to be a credit because assets are on the debit side. So when you pay, you are reducing assets. So we've decided. So now I was trying to take you back. So then, just for simplicity, if that's how you feel that it can work for you to reason it like that. So since this was a credit from bank, since this was a credit, and these things, they all add up to one amount. So because of double entry, that's what double entry means, is that both sides have to be equal. So this is a debit then. This is a debit. If that's how you can reason it, it can work for you then. That's how you can reason it then. It's a debit. It's a debit then. So, oh yeah, then this is a credit because it's the opposite, you see. This settlement discount received and all that. So this is a debit. So it goes on, I don't have to write everything. You'll see. So then, this was one way of reasoning it. But then, why another way then? Purchases. What are purchases? So you can reason it with, oh no, I've already debited this amount, so it means it's a credit. That's if maybe you are not a bit confused. But then what you need to use is the accounting equation. Purchases are an expense, which is a credit because it's a reduction in the owner's wealth. So remember, owner's wealth equity is income less expense. So These purchases are a debit. Let's debit purchases. I'll check. Somebody said, I don't know. Oh, I said I must check the balance for capital. Yeah, thank you for that. Because it's just going to put us off. As I'm saying that, I'm writing while I'm talking, you see, rather than me reading the amount that are written for you. You'll end up not knowing where am I reading from. Okay. Purchases then. Let's start with the balance. Even the balance gives it away. Balance is on the debit side. Balance on the debit side. Let me try and do it with a different color this maybe because it's a bit different. So balance brought down, it's 89855. Opening balance. Then now we have purchases now. In any case, purchases because they are the reduction in the owner's wealth. It means they are a debit. Because the owner's wealth, it's a credit. That's so purchases. So it's gonna be bank. These were cash purchases. I will follow up with my colleagues. Even now, after finishing this class, I will send them an email to ask to follow up regarding that. So if that was a credit, then it means this is a debit. So we've debited. So we've done with this. So normally you must know that purchases, there are credit purchases and cash purchases. Let's see. You see, here it is. Purchases journal. It's a purchases journal. Remember, it's a spreadsheet for a purchases journal. It's a no. Here it is. A purchases journal. It's a spreadsheet for credit purchases. So, like the way of simplifying a journal is like a spreadsheet where you add everything up. Like even student marks, I do it, but now it's done computerized. We used to do a spreadsheet of maybe assessment 1, assessment 2. So that's how you do things. To do things in a spreadsheet. So purchases are purchases. So the contract account is trade payable, which is going to give us 16,000. Then we have this amount of 35,955. Then we move on. So we are following some pattern. This is the pattern we are trying to follow. And then we have trade payables. Next. Because yeah, we need to have some pattern. Because if you don't follow any pattern, you do randomly, you're gonna get confused in accounting. You must have some pattern, whatever pattern that you will choose to follow. You need to follow some pattern. So what's next is trade payables. So trade payables that's where now you have to use. It's no longer a giveaway like before. Let's see then whether are you gonna be able to see this. Trade payables control 6075 balance. See, I'm coloring differently. The ones that are from the cash payment journal. So the balance 6075. $6075. So you open with the balance. Let's go to the ledgers now. No, to the journals. To the journals, we've got 9. So to the ledgers, we've got 9,995. Is this a debit or a credit? Now, in any case, that's why sometimes checking it with, but in any case, because it's a reduction now in trade payables, we were paying the trade payables with 9,995. Then now it is a reduction. So then that's why then we have to make it a debit. But in any case, we've already credited bank. So the rest is it's debit. So if you want to reason it like that. You see, you'll see in your study material, it's written a lot. It's bank, it's bank, it's settlement. It's I can't write everything. But the short way of writing it, it's this. 9,995. And then we continue to see what also do we have where else do we also have do we also have where else do we also have trade payables? And here it is. So trade payables are a debit or a credit? Let me go back to the accounting cycle. To the accounting equation. Liabilities are a credit. So this is a spreadsheet of credit purchases. Purchases journal is a spreadsheet of credit purchases. I'm simplifying it. This is the informal, this is the way of just calling it so that you understand. So it's a spreadsheet of credit purchases. So then what does that mean then? It means the creditors that are in the purchases journal, the trade payables that are in the purchases journal are gonna be purchases journal. So the contra account is purchases journal. Purchases, which is 18,400. Then now, let's go to the general journal now. We didn't go to the general journal before. Remember, general journal, it's credit purchases that are not a non-routine. That's not like it's a purchase of stock. So you're just purchasing something. So here it is. This is the general journal. It's already. So it means you are, it means you are then transferred. So it means this, in fact, in a general journal, in fact, it pulls out automatically. It's not necessary that you transfer it. If you put a journal through, it means it goes to the ledger straight. So this is how this went to the ledger. So then that means you have to credit it. It's a credit anyway. So you're gonna have to. What is the contra account? Furniture. If you've got a question, you can be putting it, because once I'm done with the cash payment journal, I'll open for question before I take the rest of the items. It's 3565. Then we go to the another journal, stationery. Stationery, the credit. So we're gonna have stationery of 230. So the contract account is stationary. And also at your own convenience, you can look at these things at your own time. So when you have time to digest everything. Then now, what else do we have? We have printing. See, it's already said there that you are crediting these things. We have printing. Because it was credit purchases. It was credit, yeah, it was credit purchases. So you have to credit, it's a liability. But this debit was maybe asset or expenses. Printing here, it's gonna be 805. So I think, yeah, we are done completing the trade payables control. But then we also have purchases returns. Same way we had sales returns. Let's look at purchases returns. Because purchases return reduce your creditors. Like if you just return something to a retail store, if you just return something to a retail store, these are purchases return. These were sales return. Let me see. Here are purchases returns. So purchases returns. So we're gonna have purchases returns. Which is how much? 575. It's column. That's why we have this column to say trade payables. So it's a column for it. So purchases returns is a reduction on purchases. 575. So that reduces our purchase, the amount of creditors that we owe. So how much do we get there? We get 29075. 29075. Then what? How much is the balance? Balance carried down, it's 18505. This is the balance carried down to make this 18545. So how much is going to be the balance brought down, which will take to the balance? To the trade balance. Balance brought down, it's gonna be 18505. 18505. So this is what you will take to the trial balance. Then we move on. 18505. Just want to check something as well. Then we move on. What we haven't debited or credited. Let's see. What we haven't debited or credited, it's wages. We haven't debited or credited wages. So let's deal with wages then. We'll start with the balance. Where are wages? No. So wages are a debit. Also, this text maybe going through it. So wages is gonna be the balance. They're on the debit side. 2150. Then we move on to where we were on wages. So wages are an expense. So that's why we're gonna have to debit wages. So wages are an expense, then that means we will need to debit it. Let's debit wages then. With 3828. Contra account is bank. 3828. Then let's total everything. When we total everything, we're gonna get 5978. Then we move on. Settlement discount received. Start with the balance. A settlement discount received. A settlement discount received. There it is. It's a credit. It's a credit. So it's more like it's income. So the balance is 210. Balance 210. So here is this 210. And then we move to the, just so that sometimes you can find a better way of moving around these accounts. So this is just so that you have something, a way to deal with this. So here it is, settlement discount is a credit. It's because it's income. When you receive a settlement discount, it's when you settle early. Some companies, they give you a discount if you settle early. So it's gonna be bank. Settlement discount received. It's gonna be trade payables, the contra account. Payables. No, hey, now I don't know why am I losing, looks like I'm losing power or something, I don't know. But now at least I'm back. Hey, I was worried. My connection was poor. So the settlement discount is gonna be 460. Then total is gonna be 6. Total is gonna be this 460. This the settlement discount received and the settlement discount granted. Let me see. Balance, it's 210. It's 460, 460. It's 670. So the balance is going to be 670. Then we move on to, we'll end with the VAT input. Then there are these sundry accounts, water and electricity. Once we're done with sundry accounts, we'll then jump to VAT. Sundry account, it's water and electricity, 2,700. Balance brought down of water and electricity. Water and electricity, just let's see, here it is. Water and electricity, it's 1247, it's an expense. 1247. So we go to the cash payment journal. So an expense is on the debit side. So these were 2,700. 2,700. Which means 3947. So I'll take questions once I've done this. Then we're gonna have telephone expenses. Let's start with the balance. Where was the balance? Telephone expenses. Here it is. It's 483. Balance we were having was 483 telephone. It's a debit side. 483. Then in fact we were on the cash payments journal. On the cash payment journal balance. So on the cash payment journal, this is telephone. So on the sundry accounts, so we're gonna have bank. We paid for it, bank. It's gonna be 500. So then we're gonna have to add everything. 983. Then we're gonna have drawings. Let's see how much drawings did we have before. Balance of drawings. Did we have drawings? Yes, we had drawings. If you've got a question, then you can be posting it before I turn over to the VAT input and VAT output. Drawings 3884. Balance. So drawings are on the debit side because they are a reduction on equity, which is equity is on the credit side. The balance of how much? 2150 and how much did we have here? And some of you might be struggling to follow. I don't know if you're struggling to follow, but I just want to tell you is that in doing accounting, is the journal that's the most difficult since I've done accounting, because it's a lot of batching and everything. And back then it used to be manual, you see. Now you can do this thing via an Excel and everything, you see. Other things you already copy and paste. So, but I'm saying that if you are finding it a bit difficult to follow, this is, for me, I found the most difficult part. So, because other sections you deal with, like you see with the adjustment, you'll deal with one tomorrow, with one adjustment to say, oh, do we add to this adjustment? So it's a bit difficult to keep track here. So this is drawings. I will after this, because this is the last, before I do that, I will open for questions. Drawings, it's 2,500. 2,500. So if you've got a question, then you can be posting it. I'll open it now. And then 4150. So let's see then. Oh, let me also go to the journals, to the general journals. Let me also go to the general journals and finish on the general journals. We have stationery. Oh, yeah, we have stationery. Yeah. Okay, we've got furniture first. Let's start with furniture. So that you follow a pattern. Got furniture. Let me see if I've got, where is my account for furniture? Furniture. So we've got furniture for 3,100. So the balance, let's start with the balance. Where is the balance for furniture? Let me see, here it is. Balance for furniture. Note down, which is 5320. Balance for furniture, it's 5320. 5320. Then let's see on these are general. So these were credit transactions, which so furniture. So the contra account is going to be trade payables, which is going to be 3,100. Then we are done with, then we're left with stationery. Let's deal with stationery then. Stationery, what's the balance? I'm going to be a bit fast now so that I can catch time. We've been doing this quite a lot. So that at least we finish exactly by stationery. Very stationery. Very stationery. So that you finish exactly on time, but also we have to prioritize that you understand. So it's not just, so stationery, it's 250, the balance is 250. It's an expense. 250. Let's see, the general journal. The general journal is part of the accounting like 16. It's gonna be 200. This is where I have a discrepancy. I just want to see, because there is something I changed. I don't remember where did I say stationery. I just want to see. Just have to see. Because there is some, yeah. For stationery, I said, yeah, stationery, I said it's on, yeah, it's on credit. So that was the story about it. Yeah, so it's gonna be trade payables. Trade payables. Because I changed something, but then there is a day in between. I think it's a weekend in between. So I don't trade payables control. I said it's on credit. Yeah, change it to be on credit. Trade payables. In any case, it's gonna be 200. Yeah. 200. So that gives us 400. Then lastly, printing. Is printing. There has to be printing somewhere. Printing. We don't have a printing. Don't have a printing opening balance. So we're gonna have, here is printing. Here is printing. It's a debit anyway. So it's gonna be trade payables. And then check your questions. If they say you had questions, it's gonna be 700. Let me check then if you had questions then. Let's see. If it questions. That's what, oh yeah, I don't know, yeah, more papers. So can you please check the total bank? Okay, I think I've done with this. Why are assets on the debit side, on the credit side? I think they are both belong to the owner. Kindly explain to me. So why are assets on the debit side and why owner's equity is on the credit side? Now you have to separate the, you have to separate Unati. You have to separate the owner and the business. So the owner's equity, the owner's wealth, it's just a measure. There is nothing that's when you go to a business and say, here is owner's equity, let me take it, let me go away with it. So owner's equity and assets are the same, are the two sides of the same coin, it's the same thing. You see, they all belong to the owner, but it's more like you are calling it owner's wealth. That's just a measure. Let me see. Yeah, this was NRT, or somebody has explained it for you. My say it is rent and expense with debit equity credit yet credited rent on the ledger. Maybe that's why I was saying, Simpiwe, that sometimes when I write, I talk, I might end up doing something different, but you've got the correct thing there in your study material. You see, I could present what even from your study material exactly as it is, but I write and talk so that you see you won't even fall asleep. You see, so yeah, Impiwe. Or maybe some, yeah, yes, you must correct each other. You see, and then they're even saying no, man, Impiwe. 4650. That's why I'm saying it's a discrepancy. I'll check a rent. Yes, the previous sessions are uploaded. Oh, yes. You see, also, that's good that you're also learning to interact with each other. This is called peer learning. It's good that you see you are peer learning. Let's deal with VAT now. I'll start with VAT. That is on the cash receipts journal. Hit the VAT input. Let's start with the VAT input. So I'll start with the balance. VAT input, I don't know if you can. VAT input is an asset. Let me highlight here first. VAT input is an asset because it's what the owner paid to the when he bought something. It was collected by his supplier, the owner of this business. So it's an asset to him because he can claim it back to SARS. So it's a debit anyway. This is the money he has already paid. Well, if it's not yet paid, it's because it's part of the, it's still gonna be part of the liabilities. Like it's gonna end up paying. It's in trade, but trade payable. So he's gonna end up paying it. It's a liability. Then let's input. Let's input. It's a debit, which is 3880. Which is what is that input now? Oh no, it's not 3884. That is the VAT input, so that you can see where am I taking it from. VAT input 4337 balance 4337 4337. Then let's move now and see wherever we see a VAT input. Here is a VAT input. So here is a VAT input, but this one is on the credit side. This is. Yeah, we're debiting everything and we are crediting, we are debiting. So here is the VAT input. You see, it's a debit. It's on the its contra account. It's gonna be its contra account is gonna be trade receivables because it reduced trade receivables with 75. It's this one that you are debiting. This VAT input. So we're dealing with VAT input in the meantime. VAT input. There must be a VAT input. Let's see. This is a cash. Oh, yeah. So then you move on and look for another VAT input. A large amount of VAT input will be on the cash payments journal. Let's have to check for you. So a large amount, because then that's when the business is buying. So that's where it pays a lot of VAT. So here is this one. So it's an asset. That's why we're debiting it. We will claim it from SARS. So we are covering everything that has to deal with VAT. So it's a bank contra account, which is how much I've just highlighted it. These were trade receivables. And then we move on to another VAT input. This is VAT output. Wherever this is VAT output. A VAT input is what we pay. So I'll deal with VAT output first. You see, here is VAT input. So we are finishing. So now we are closing off everything now. So again, VAT input in the purchases journal. Even though we haven't paid for it, but it's an asset because we owe our suppliers. So it's going to be the contract account is trade payables. You can see here, this is the contract account, which is then this VAT. So it might not necessarily follow the same pattern as it's done there, because you see, I just wanted to follow some pattern. But the amounts will all be there. Let's see another VAT input. Here is it. Purchases returns journal. So, in fact, I should have done the debits and credits here. The trade payables were a debit. So that if you can follow, trade payables were a debit. So the VAT on the purchases, returns, journal, its contract account, yeah, it's this one. So it's gonna be trade payables. Which is 75. Then you go down. Here are VAT inputs. They're already on the debit side anyway, which is general journal. There is this. So they will claim for it. What is the contra account here? It's trade payables of trade payables. This is the contra account here. So what is this contra account of trade payables? It's gonna be 465. Then we have another VAT input. And what is its contra account? It's trade payables again. Of 30. Then the last VAT input is gonna be 105. It's already on the debit side. Again, it's trade payables, which is 105. 105. Which then gives us 9407. 9407. 407. Then the balancing figure, if you add all this 947 minus 75, you're gonna get 932. So this is the balancing figure. So it's VAT control account. It's VAT control account. What does this 9332 mean? So it means we will then have to do the journals now. Then we will have to then do the journals. So we will have to then credit this VAT input so that we remove it. That's when now it's gonna come to the general journal. We are transferring it from the VAT control account. So we are transferring it from the VAT control account. So we had 9332. 9332 as a debit. So let's take that to the VAT control account. And with the contra account of VAT input. Gonna be 933, 9332, 9332. So we are removing it from input account to the VAT control account. So in our VAT control account, then that's when we have start with the opening balance. I think there is no opening balance of the net VAT control account. So now in the VAT control account, our input, our assets, where is it? It's VAT input. So it's just that these are contra accounts, so it ends up being we are using VAT input, VAT control account. It ends up we are using it interchangeably, but this because it's contra account. So it means our assets in the VAT control account it's 9332. So we've closed off the input VAT. So the input VAT account is 0 at the end of this month because we've taken this 9332 to the control account. Then let's now look at the balance brought down of the VAT output. VAT output was balance brought down. It's one that I've highlighted. One of 4527. 4527. Let's look for VAT outputs then. Here it is on the cash payment, on the cash receipt journal. Here is the VAT output on the cash receipts journal. Which is 1775. So the VAT, on the bank. So contra account is bank. And so this also needs your practice as well. You will grab something I think there is a revision exercise or in your study material. So this will need your practice as well. So let's see what other VAT output. Here it is. We've got a VAT output of 69. So this is gonna be a credit because VAT output is a credit anyway. But in any case, we've already, everything else here is a debit, but then because this is a negative, it's gonna be a credit. So this one is gonna be a credit. Still need to process this. So the VAT out from bank, yeah, this is from cash payments general, which will be bank again. It's gonna be 69. Then we look for another VAT input again. VAT output. Here is another VAT output. It's in the sales journal. So a VAT output is a liability, it's credit because it's what the business collects on behalf of SARS. This is a sales journal. So these are abbreviations here on this column. It's gonna be sales. The contra account is gonna be trade receivable. So this is gonna be the trade contra account. This is gonna be contra account. It's gonna be how much? It's gonna be and then open for questions. That's if there's somebody who has a question afterwards before I just wrap up everything. After this 2000. Then let's look for another VAT output. Here it is on sales return. Another VAT output on sales return. It's 45. So excuse me, sales return are an expense. So when customers return things, so it means we need to reduce the VAT that we are owing SARS. So that's why it's a trade receivables. 45. So I'll open for a question. I think we'll be able to finish it. I think, yeah, it's one at 9 as planned. Then now you balance everything. So total here it's gonna be. Total here it's gonna be. I just want to check what's gonna be the total. The total here is gonna be 8751. 8751. 8751. Then the contra account for this amount, it's VAT control account. So this man we are taking it to control account. So you see, we can't say VAT output for VAT output. You see, that's why you have to see. So it's gonna be 8706. 6. Let's put it in the ledger then. So we debited the VAT control account. Let's debit it then. Debited the VAT control account. Might have forgotten when did I do this, because there is a journal that I did of the VAT control account. I must have done it somewhere. Must have done it, or did I do it here? Let me see. Oh yeah, I need to do it here. So the journal for the VAT control account. Journal for the VAT control account gonna be 8705. 06, which is VAT output. So we are everything VAT output, also are removing it, and then instead you are taking it to VAT control account. That's why now this is gonna be credited, the output VAT gonna be 8706. And yeah, also, yeah, this is for me, that's why I found the most, because it's painstaking. You have to track a lot of things here. I found it very demanding in all the learning of accounting, because here it's a lot of things that are involved. Let's see the VAT control account. I just want to see, where did I have the VAT control? Remember then we said we had debit, we had created the VAT control account with VAT input, with VAT output. So of 8705, 8706, then it's a balance. Then it's 932, 932. So it's a balance carried down. This requires sort of a maximum concentration, because you have to really keep track now of things here. Yeah. But then also you have to practice yourself as well, because accounting works with practice. This one, what was the balance carried down here? If we're gonna say balance carried down was 626. This one will be paid over SARS. Balance carried down gonna be 626. 626. Balance brought down. This is a balance brought down. If there is somebody who has a question, I will take that question. And then before I then just post, then we'll be left with, I think we are done with all ledgers. So we'll be left with yeah, I think I missed the sales returns journal here. That's one on the VAT thing. Oh no, I did. So you see, that's why it's important to highlight what you've done. So sometimes, as I'm saying, I'm talking and I'm doing. So sometimes I forget to highlight. So now so this is what is owed. This is what is owed to SARS now. We've netted off everything. Let me see if you've got questions. So let's see. When you do closing transfers of discount granted of sales account and discount cost of sales, also would VAT on discount granted when offers of to adjust. Also have to cancel VAT. Maybe how they are treated. Oh yeah, this one is explaining to someone. Discount received it will have credit balance. Discount is an expense, therefore. Yeah, it's good you are explaining to each other. Oh yeah, I'll correct drawings. Please explain what happened with the discount and their effects. The settlement discount is not the discount that you get when you buy at the till. So it's a discount that let's say just that you as a customer, you don't get that discount. If let's say you were to get a settlement discount, the VAT that they would have charged you, that they were owing SARS, it's now they're no longer owing SARS. It falls away, you see, but it's just that it happens through accounting. So let's finish whatever it's not taken care of. We've taken care of everything, cash payment, cash. Let's see. Yeah. Sales return. Let's debit or credit sales return. Let's see. Sales return. These were wages. Let's see, where are sales? Oh, here are sales return. Sales return. Did we have? I just have to check if we have balance. Sales return, no, we didn't have a balance. So sales return will be debit because it's more like an income. So they'll register trade receivables with 300. So we've covered sales return. Purchases returns. They will, so we are purchases on the debit side. So they're reducing trade payables. It's good that we don't add where there is no other trade payables, where there is no other side. See, so yeah, printing. Okay, then now we go back here. There are those that didn't change. There are those that didn't change, like land and building. It cost 60,000. You see, so we bring those balances as they are. Nothing changed from them. Nothing changed. $60,000. It's a balance, just as it is. So that's why I highlight what I've done, because then it sticks out nicely. That inventory, trading inventory, I think is one of the last items that we haven't done. So we also bring it as it is, inventory. $5320. Inventory. It's going to be balanced. 5320. 5320. Then that is, no, it's not 5320. It's 6. There is inventory. Let me. And in fact, the trading inventory, now once, it's have to change the pen. Trying to, or maybe I'll because yeah, I think you can see it's one that I'm trying to highlight. It's 6536. Inventory to trading inventory 6536. 6536. Then there is the last one that you haven't done, is the packing material. So we're now picking on things that you haven't done, the packing material, which is 6964. 964. Then now we are now transferring all these things, all these balances. Furniture have to 8420. We haven't added it. So now we are transferring everything now to the balances again, because it's the end of the month. We are starting another balances. So let's then do the trial balance. Then I think it will take us around 5 minutes. Then we are done. We would be done. Let's do that. Trial balance. Yeah, let's do the trial balance. Just that I want to follow the pattern. It might not be as exactly as it might not follow the same pattern that you have. I just wanted to know that if you want to do this, which pattern do you follow? Because if you jump around, then it's going to be a challenge. Just want to check. Yeah, let's follow the pattern to see how do you follow the pattern to get this thing done. So bank 8455. This is where now we're taking this thing, these balances now. We are transferring now. Bank 8455. 8455. Then I'll take the last questions and then we close. Then we're gonna have sales. Sales, where do we have it? There it is. Balance. You take it as it is, it's a credit. So you take to where it is 4469. Then tomorrow we are doing adjustments. Then it's trade receivables. That's next is trade. Trade receivables. And lastly, also please complete for me the 11,376,370. So it's a matter of transferring the balance brought down as they are. Settlement discount. Granted. So settlement discount granted 670. So then we move to VAT input. So we have to deal with the VAT control account because VAT input were transferred to the VAT control account. Also, I've shown where do these amounts come from, so I'm not going to be highlighting because these are repeated. Then we move on to capital. And then take the last question, which is 90,000. Then rental. So one student, this student was saying, no, man, rental income. Maybe I should have wrote in rental income. This is rental income. Thanks for the student that who identified that. Also, yeah, you must help each other then. Then purchases. Makes the class go faster if you helping each other. 35955. Then trade payables. Much is trade payables? It's 18505. Then we have wages. 5978. Then you have settlement discount received. Settlement discount received of 670. 670. We are taking from here, and then we have water and electricity. Which is 3947. Then we have stationary, which we are taking on the other side, 450. So I've written 400, yeah, so it's just those discrepancies because I'm talking while I'm writing. 450. But you've got the correct thing in front of you. You have the telephone. 983. 983. Then we have drawings. 4150. No, no, must not. Drawings. You have to check drawings because sometimes I write while talking. I just have to check how much were my drawings. Also, I can see there is a discrepancy. The opening balance, in fact, here was 3. Got this opening balance wrong. It's 3,384. And that gives me 6,384. 6,384 drawings. Then I have sales returns, which reduce data of 300. Then I have purchases return. Which reduce, in fact, yeah, purchases return are more often expenses. But there, in fact, yeah, sales return reduce creditors, reduce sales, and purchase return reduce purchases. In the income statement, we will be dealing with that. We'll do that tomorrow. Purchases return is 500. Here is it. Then I have furniture. Furniture 8420. Then I have printing. Of 700. Then I have land and buildings. Of 60,000. Then I have inventory. $6,536. Then I have packing material. $964. Then you have the total. Then exactly at 9 o'clock, then we check if we've got questions and then we close. Yes, you must also, yes, I like it that when you do closing transfers, you close discount granted to sales account. Good, yes, that's correct. Ah, that's good. You know, if I had marks, I was gonna give this person who's assisting me with with answering the question, because it makes it faster for us. We purchase merchandise. So if why or when purchases entries change into added into the list, we purchase merchandise, trading inventory, right? If so, when, why, or when will the purchases entries be changed to the inventory list? Okay, this inventory list. So here they are using what they call it. It's what do they call it? It's, I just want to find the name, periodic inventory system. So with periodic inventory system, it's inventory that when the year starts, they do a stock count. So they will change again at the end of the year once another stock count is done. So in practice, businesses that do use periodic inventory systems are like tech shops, or like those shops, like those shops, small supermarkets. You see, those they do periodic inventory system. But the moment a business using a scanner, it use perpetual inventory system. So that one changes every time there are purchases. You see, when you go to a shop and then they scan, it updates on the computer. So that's when it changed. So that's how, that is your question. So that is answer to your question. So I think we are done for today. Then, yeah. Then I will then have to just follow up with my colleagues regarding the self-assessment question that will enable you to answer. So I've already uploaded for you the question we'll be doing tomorrow. I think I've indicated it's revision exercise something. Yeah, you must check on your MyUNISA. So good night for now, students. Please remember, I don't know why you're not completing the lecture evaluation form. Yeah, it's important that you have to complete the lecture evaluation form. And I wanted to get Mpho here so that you can tell you that you need to complete the lecture evaluation form. So good night, students. We will see each other tomorrow then.